Hi, I'm Ada Taib, the Associate Editorial Director for Middle East and Asia Pacific Crude and Fuel Oil. Here are my takeaways from Perth Forum today. So discussions today are focused on the current state of the energy markets, focusing on the economic landscape, crude oil dynamics, LNG market trends, as well as the long-term outlook. In terms of economic environment, we find ourselves in a place where tariffs are at their highest level in over a century. This situation is not only creating significant uncertainty, but also jeopardizing economic growth across various sectors. As we look towards refined oil products, the outlook appears bearish, especially for diesel, jet fuel, and fuel oil, where it is projected to face declines, while gasoline seems to show some resilience in terms of demand. In terms of crude oil supply and demand, projections indicate that crude oil production will outpace supply growth in 2025. This imbalance is created or led by the OPEC Plus unwinding of production cuts as well as non-OPEC sources. We see uptick in supply from Guyana, Canada, and Brazil, while lower oil prices could see US production growth slowing down with potential decline in the coming years. However, we must also consider the sanctions limiting investment into production as well as access to oil product from Russia, Iran, and Venezuela, which will add a layer of complexity to our market dynamics. Looking to the LNG market, we anticipate that prices will stabilize between $12 and $14 per MMBTU in 2025. This stabilization is a result of weak demand contending with tight supply. We understand that the market is evolving towards a more balanced state, with significant new liquefaction capacity being developed. However, it is important to note that most of the demand will come from Europe, where storage filling mandates will continue to increase the level of purchasing from European buyers, while Asian imports are forecasted to slightly decline. So looking ahead on the long-term energy outlook, it presents both challenges as well as opportunities. We understand power demand is expected to nearly double by 2050, which will necessitate a slower phase-out of coal to ensure system security. The growth of renewable energy may face hurdles as rising demand outpaces the pace of integration. The growth of renewable energy may face hurdles as rising demand outpaces the pace of integration. Additionally, we could see the LNG market facing surplus by 2029-2031 as increased supply may outstrip demand growth. Investor sentiment, meanwhile, is shifting as we recognize the complex transition to cleaner energy. Upstream sector continues to play a significant role, but there is a growing focus on maximizing shareholders' return and developing low carbon strategies. So the industry requires a pressing need for new production sources to meet future crude demand, while there's some societal risk related to unsanctioned projects. Finally, we must address the supply chain challenges that we face. As we have heard, post-COVID cost increases are still ongoing, exacerbated by tariffs that affect global supply chains. In conclusion, the energy markets are experiencing significant shifts involving geopolitical factors, demand fluctuations, and evolving supply dynamics. So as we navigate these challenges, it is essential that we maintain a focus on balancing growth with sustainability, ensuring that we adapt to the changing landscape while continuing to meet the energy needs of the future. Thank you so much for listening.